In this video, we're going to cover adjusting entries. Companies use one of the two following bases, which are methods to prepare their financial statements. We had talked about cash basis. This is where companies recognize revenue when cash is received, and when companies recognize expenses when cash is paid. Remember, the term recognize in accounting mean recorded in the books of accounting. But there is another basis, the accrual basis, and this is where companies recognize revenue when revenue is earned. That's when the company has done their part or provided goods and services. And expenses are recognized when they are incurred. And I said, think of incurred as when the company uses up expenses. GAAP says we have to use accrual basis to prepare financial statements. Whenever a company uses accrual basis, some revenues and expenses are not recorded at the end of the accounting period. So what the company has to do is they have to measure those expenses and revenues and record them at the end of the accounting period. These are called end-of-period adjustments or adjusting entries. They both mean the same thing. The proper term is adjusting entries, but your textbook uses end-of-period adjustments for now because we really haven't done the true debits and credits and so on yet. These are recognized on the last day of the accounting period. So if we're looking at 1 year, these will be recorded on December 31st if it's a calendar year company. If it's monthly, it'll be on the last day of the month. There are two types of end-of-period adjustments. There's deferrals and accruals. And let's take a look at what those two are. First, let's look at accruals. Accruals are when a company uses the expense before cash is paid. We've already taken a look at this in our Chapter 2 videos. Examples are salaries, interest, and taxes. Companies use up the expense and then pay for the expense later. For example, if at the end of the year, employees have worked for the company, but they have not yet been paid, that's an accrual. And what we need to do is we need to figure out how much salaries are owed at the end of the period and record the related salary expense and the payable as an end of the period adjustment. I had recorded a video on accrued expenses in the previous chapter, so if you've forgotten, be sure to go and review that video. Now, this chapter covers deferrals. Whenever we're looking at a deferral, the company is going to pay cash before the expense is incurred. So the company will pay for the expense before they use up the expense. Or the company could receive cash from customers before revenue is earned. I will have different videos that explain examples of deferred expenses and deferred revenue. That's it for this video. Please let me know if you have any questions.